coming at you from Kingston, New York. This is about 100 miles north of New York City. It's my last day here. This is in fact a very interesting city, right? There's a rich history here. It was a hotbed of revolutionary activity during the American Revolutionary War. And it was actually burned down by a very vindictive English army. I guess partly because like there were incidents like shortly before the Revolutionary War, the mayor of Kingston, when he was sworn in during his ceremony, he said something like, instead of God save the king, he was like, God save the people, right? Word of this got back to the king. Word of this sort of, came around. A lot of people were sort of saying stuff like that, right? We were already on the cusp of these events transpiring. So there were also nearby, there were the battles of Saratoga, both of them taking place in 1777. And that was actually, I guess you could say like the first major turning point of the Revolutionary War. Because, and you see the same kind of dynamics play out today where a greater power, in that case it was France, decides, oh look, if this is a nation that is clearly able to defend itself, that has the willingness to do so, right? This is somebody that we could recruit for our own kind of geopolitical goals, right? Which is why France ultimately decided to help the United States, right, to sort of drive this wedge in Europe to kind of like remove Britain as the dominant power, which obviously took a long time, but nonetheless, right, we see the same thing going on in the 20th century, 21st century now, right, the Russia-Ukraine war, right, it was kind of obvious that if Ukraine was not willing to defend itself, right, if it was just surrendering in the battlefield, there would have been very little chance of like ever receiving any kind of aid, right? It just would be one of those conflicts that never gets reported on, right? Nobody knows about. Like how many people know, for instance, that the war in Ethiopia recently, right? It seems to be winding down. Who knows if the peace is going to last, but right, this is a war that killed 600,000 people over the last 2 years. Right, obviously a far larger conflict in terms of body count than something like Ukraine, but because it doesn't have geopolitical importance, you don't really hear much about it, right? And Kingston has this, look at this, right? So tons of churches everywhere. Some of them actually are out of commission, right? There's definitely a lot of abandoned churches as well, Catholic schools, that kind of thing. But it sort of like shows a lot of what happens in the United States kind of like at large, where you have like a ton of inequality, right? You have a ton of, let's just call them mixed messages from whatever local polity exists, right? This is a city with a fairly low median income compared to the rest of New York State. There's a ton of like, like structurally, for instance, like we always hear of this thing, born on the wrong side of the tracks, right? What that refers to is very often when cities were being established, towns were being established, you either had segregation, racial segregation, or socioeconomic segregation based on these kinds of physical barriers, right? Such as train tracks. Here, I'm going to show you a little bit later, we have a bridge, right, and a highway that divides this sort of downtown waterfront in Kingston with the from the housing projects, right? So it's one of those things where even if like culturally America was ready to truly desegregate or to truly sort of like let go, of its racism and move beyond to a new kind of like mode of being, right? Structurally, I can imagine many places will take a long time to catch up, right? Even if that was the goal, right? If the goal were in fact to catch up, it would take a while for that to happen, physically. Like think of all the infrastructure in place all around the country, right? And many cities are worse off than Kingston in this regard, because at least Kingston has some level of cultural pull. Look at this, we have like tons of interesting little details like this, right? I just love walking by and seeing Just seeing like little things, right, that you wouldn't find in New York City that easily, right? Tons of uphills, downhills, mountains, walking around. So in today's video, I want to talk about a few different things. I'm going to be commenting, I guess, on Kingston as we're walking around, but beyond that, there's a lot of stuff in the news. There's the whole FTX blow up in crypto with Sam Bankman-Fried that I want to talk about. I want to talk about the midterm results in the United States. I want to talk about this set of new developments in the BRICS Plus system, right? That's Brazil, Russia, India, China, South Africa, right? There's now, I think, a dozen or so nations that are trying to get in on that, right? They're trying to form this economic union of developing nations, which is interesting to look at simply because of who the applicants are, right? These are applicants who ostensibly seem to be geopolitical rivals, right? Have a history of either warfare or, things of that nature, even if it's not outright military confrontation. I don't actually, half the time, I don't even understand how these lights work, right? Cars stop and the street lights don't change, or they never do. I don't know. So I'm going to keep walking, right? So I could sort of keep the pace up. But I guess let's start with the whole Sam Bankman blow up. So I watched a few interviews with this guy, right? Because he was sort of coming into prominence over the last year or so, especially I guess over the last year. And he always struck me as I don't know, very, very kind of creepy, right? Creepy not only for the things that he would say, but the kinds of advertising of himself that he allowed, right? There's like two separate issues there, right? If you see a guy who is comfortable with creating a cult of personality around himself, right? Ads like all over various cities, they just kind of plaster his face, right? You still have this on bus stops, that kind of thing, right? His face is plastered all over the place, and you think like, well, is this an exchange that we're advertising, or is it something else, right? Are we just talking about the FTX exchange? Are we talking about someone that is just seeking celebrity? Why specifically do we see his face everywhere, right? What does that pull? Right, I mean, Elon Musk does a similar kind of thing, right? Where, to the extent that he's making money off of various businesses, a lot of it has to do with his personality, right? His bombastic sort of style, right? People are drawn to that, rightly or wrongly, right? You don't even have to. I mean, you know where I stand on this, but even for the purposes of this video, you don't have to take any kind of, you don't have to take a position. All you have to say is, for whatever reason, this is what human beings respond to, right? And that visceral response gets married to a monetary response. So when you see some of these interviews with Sam over the past couple of years, he would always play up his something called effective altruism. And effective altruism, as a rule, specifically when it's married to this kind of notion of the way that I'm going to maximize, right? This kind of like utilitarian function, right? The way that I'm going to maximize for the common good, the greatest good, is I'm personally going to make as much money as possible so I could then give it away, right? That's sort of the idea. And the reason why this is very sketchy is because at a certain point, right, whenever money gets involved in anything, there's going to be a wall that comes up, right? And that wall is between who you are as a person and, whatever like stated goals you have versus who you become as this money starts to accumulate, right? It's very rare for someone to be able to truly transcend all this, right? He would play up, for instance, the fact that, I just drive a Toyota, right? I'm not somebody that is interested in things that are fancy or flashy. And yet you see, his living quarters, right, in the Bahamas, where it seems as if there was all this romantic entanglement with all the people that he was living with, right? He said that he was living with 8 roommates. You have this almost like this image that he's living in some kind of like apartment shared space, when in fact it's kind of like a little bit of a fort, right? And there's all these like romantic entanglements with everybody involved. You know, the CEO of one, you know, sub company is fucking the CEO of the head company, right? Back and forth, right? When they are in the middle of like hiring new people, they had like orientations where Sam would talk about amphetamine use, right? So they're all hopped up on stimulants. It just seems like overall kind of weird. So when people have like various indulgences, like it's not every rich person is someone who wants to live like a hog in the conventional sense of just like, I'm just going to do coke, fuck strippers, do this, do that, have fancy cars, right? That's only one outlet. You could call that maybe the most crass outlet, the most trite manifestation of wealth. But different people are wired in different ways, right? And in Sam's case, it was much more so, I want some kind of worship of myself, right? As a boy genius, right? He just turned 30 this year, right? So he wanted to be seen a certain way. And ultimately, right, he didn't need cars, right? He just needed, I guess, some fancy properties. He needed some friends around him that I guess were also exchanging sexual favors. And he needed, kind of like hero worship, right? He needed his youth, right? His youth is something that seemed to be very important to him, right? He would always play up his age. And he would always make sure, and this is what I said at the beginning, like, there's also a creepiness to what he allowed to be written about himself. There was this video going around where early on he was presented as the world's most generous billionaire. And this guy that was like this kind of like hype man, right? He had like Sam standing next to him and he was like sort of hyping him up like, hey, look, this is the world's most generous billionaire, blah, 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 introducing him. He's like, hi, my name is Sam and I'm a vegan or like whatever. And like, should you be comfortable with that kind of coverage? Should you be okay with this like fawning praise? Like, shouldn't you at some point say, look, if you print certain things about me and if you use certain kinds of language, I'm not going to give you interviews again. I don't want to be seen this kind of way, right? It's just very cringy. It's very silly. This is not what we should be emphasizing. The whole effective altruism thing specifically married to, this is like an 80s development, right? Where, I mean, effective altruism would kind of like existed for a while. And I guess you could sort of see even like the roots of this, obviously, like John Stuart Mill or whatever. But specifically in the 80s, among these kinds of like hipster types, it was never popular, right, to be in finance if you're like a true kind of hipster. And yet, starting the 80s, the hipsters that actually also wanted tons and tons of riches, they said, we're going to go into finance because this is the way that we can make the most money and give the most of it back. The second you say that, very fascinating things start happening. The lines start to blur, right? There's a difference between working and as you're working, giving everything away as it's happening, right? To ensure that, money doesn't have this outsized influence on your life, right? If you're constantly giving it back right away and you're not allowing billions and tens of billions to accumulate, at some point he was sort of pretending that he was worth something like 30 billion. I'm not sure if that was ever actually the case, even on paper, right? When we see some of the actual liabilities, right? He said that his company had no liabilities, and obviously it was all liabilities, right? His FTT token was serving as collateral, which is, I mean, it's kind of insane if you think about it. How does a person mint their own token and allow, competitors to buy it up, right? Because this is exactly what happened. If they want to dump the price because you're pissing them off, they're going to do it, which is exactly what occurred. So the effective altruist is now in this dilemma, right? He has to, on the one hand, argue that the means justify the ends but the ends, as time goes on, even they themselves, like, first of all, obviously you could even take issue with the means justifying the ends, or rather, sorry, the ends justifying the means. But even if you don't take issue with that and you sort of take it at face value, you're still now stuck in this position where suddenly, as the ends get closer and closer and closer, you want to keep pushing them further and further back, don't you? Right? Because you want to make more money. You want to live like that hog. And you tell yourself, well, I'm not living like a hog in the conventional sense. I'm not doing what typical billionaires do. And sometimes the story has some level of truth. Sometimes it doesn't, right? In this case, it was a mixture of both. A lot of it just came down to this like sociopathic kind of lie, right? About everything from the actual lifestyle, right, to what exactly was going on in this business. A very interesting kind of buildup of cars for a very small road. Let's wait for them to pass a little bit. So anyway, right, so that's the effect of altruist dilemma, right? I'm always suspicious of anyone that says things like, I'm going to live like a hog as far as I can, and then give all my money away when I can no longer enjoy it, right? And again, in the back of your head, it's like, well, shouldn't I get to enjoy it if I give 100 billion away upon my death, right? Doesn't that actually like do so much good? All right, so it's very easy to come to these kinds of justifications, right? Because when you read the philosophical literature, all of it, right, especially if it's not, if it's a kind of like ethical system that is totally divorced from something called like virtue ethics, right, which are kind of interesting to look at, to consider, right, in light of something like, a purely utilitarian calculus, right, to the extent that I'm on this channel, right, and I'm talking about the arts, right, I'm talking about doing precisely what you're best at, irrespective of what you actually want, right. There's this kind of like elimination of libertarian egoism, right, that doesn't like that in and of itself, right, could be like a valuable good, right, because of all the kind of ways that it opens up to be able to behave certain ways that libertarian is, or rather like utilitarian ethics don't quite allow you to do. So the specific details are also interesting because when it comes to the blow up itself, right, when you look at how people discuss cryptocurrency or when they discuss like any sort of like billionaire kind of, industries, they always seek new heroes, right? The most obvious hero, right, for a lot of people is Elon Musk, right? Because he either made them a lot of money, right, through Tesla stock, or made them a lot of money through Doge, right? Which, it's going to be a minority of people that are able to capitalize on that, but there's always a segment of people that are able to make money off of this, so they're happy with him, right? They're willing to worship him. Then there's also a far bigger group who this is like wider, like in America, like in general, who believe that I could be a billionaire too, right? So they look at Elon Musk, right, and they sort of see what they wish to see, which is a reflection of themselves, right? They don't, they obviously miss the most important elements, right? Elon Musk's family, right? The money that he starts with, the fact that billionaires in general, I mean, like I've always said this, right? For you to get to the point where you have billions and billions, especially hundreds of billions to your name, a lot of bad things have to happen, right? There's no way. With the way that society is set up in general, there's no way to actually get, without having some bodies along the way, without having tons and tons of unethical behavior, right? And whether that's, through, I mean, like you could look at our Elon Musk video from a few months back. You could look at the sort of like dirt that you could get, I guess, like on any billionaire. The one thing about capitalism now is you could do some of these things with fewer bodies than ever. Like I did this one essay a while ago on Ross Ulbricht, right, who was the founder of the Silk Road. And, he was a drug dealer essentially, but the difference between that drug dealer and a different kind of drug dealer is a drug dealer that is not on the internet but is in the street, because capitalism in that context, right, in the street context, right, that gets tallied, that leverages power specifically through murder, right, through death, right. This is how you exercise power. If you're able to sort of offload everything into the internet, right, he has probably what Ross has, maybe at most a few dozen deaths to his name through overdoses and the people that he thought he killed, right, when he was orchestrating a hit against various people, right? But the body count is much lower, right, than if he were to have made like close to $1 billion or whatever it was, his peak net worth in the conventional sense, right, through drug dealing, right? He would have had way more than a few dozen corpses to his name if you get to that level of billionaire status, right? So with cryptocurrency, it works exactly that way, right? Because people that invest in something like the S&P 500, right, just like the general broad stock market in America, this is wealth, right, that goes into retirement accounts. It's wealth that creates jobs, right, in America. It's wealth that oftentimes goes into, very useful businesses that are not always, right, but sometimes they're reasonably well run. So you could point to these kinds of like little positives. At the same time, you have to wonder, what exactly are the externalities there? Like, how do you tally them, right? Because investing the S&P, first of all, you are propping up, obviously a person like Elon Musk to begin with. You're also propping up companies whose sole existence is the manufacture of instruments of war, right? You're investing in companies that are just major polluters, monopolists, right, that get to their position unethically. Those that do redlining, right, historically and up until now, everything bad about the status quo is essentially propped up by these kinds of companies. With cryptocurrency, it is a kind of like almost internet native industry, right? So the externalities there are the majority of people that decide to go speculate, right? And by speculate, I don't mean, I don't know, like doing like what would be the equivalent, right, of buying the S&P index and just like sitting on it. It'll probably be buying, just Bitcoin and sitting on it and not buying, not selling, right? Just sort of like waiting, right? The kind of classical advice for something like buying index funds is just buy and wait and don't ever sell unless you absolutely need the money for some kind of life purpose, right? The majority of people that sort of start everything as speculators in this industry, they end up losing their money. They end up, there's obviously suicides linked to it, right? Clearly there's suicide, linked to like the stock market. I'm sure when the stock market crashed, there was a ton of people who killed themselves, right? Every single crash, right? Like anytime that you open up a chart and you see like a wick down, right? There's somebody on that wick, right? That wick literally impaled, right? They're dead because of that wick. To you, it's just a little permutation, vacillation, fluctuation in the chart. Sam is very much playing into that element of it, right? Whether it's like selling leverage products that are very steep leverage, whether it's trying to, like kill this sort of native utility of cryptocurrency, which is more kind of closer to like the decentralized finance end of things. Like you start noticing, interestingly enough, like before the blow up, last couple of months, right, he was backing this bill, right, among lawmakers. He actually is a major donor to Democrats. He was the 5th largest donor to the midterms, right? He gave about 50 million. What I also learned, however, is that although he was the larger donor to Democrats, one of his partners is a major donor to Republicans. So we're just trying to split up parties in that way, right? To get people on their side, to essentially bribe them off. I mean, this is how our system works in America. Again, 2020, Biden got $1.5 billion in corporate donations. Trump got $1 billion, right? These are bribes to get them to pass certain kinds of laws, to not touch other things. 2020, I told people, I don't care what Biden says about tax cuts, reversing Trump's tax cuts. It's not going to happen because he will then give up his share of these spoils, right? He's not going to get those donations again if he reverses the Trump tax cuts. Because billionaires might disagree on many things. The one thing they will not disagree on is you cannot tax me, for the most part, right? There's some exceptions, but generally speaking, that's the rule. That's how it works. So Sam, shortly before the blow up, he was pushing products and laws that are meant to take the bite out of decentralized finance. And for people that don't know what that means, the difference between a centralized exchange like FTX versus DeFi is in DeFi, everything has to be, I don't want to say like 100% transparent, because there's definitely been like, you know, a lot of situations where that's not the case. But generally speaking, in terms of like liabilities, in terms of liquidation points, in terms of, you know, the assets on the books, you can't escape the fact that everything is on, you know, the blockchain, right? And it's public, right? One of the odd things about Bitcoin is how people assume that Bitcoin is private, right? Just the general public, when in fact, like it literally isn't, right? It's the exact opposite of public. It's the exact opposite of private, right? It allows everything to be tracked. And there's even some conspiracy theories that Bitcoin is just an invention of the government, right? To track people's finances, to get them in trouble, right? And with DeFi, you see all the liquidation points, right? You see where the assets are. You see exactly what's going on, right? It's not that you can't hide anything. It's that it's much, much harder. Like, you would not be able to hide the kind of fraud that went on in FTX or any other centralized exchange, right? You literally, you can't do something like that, right? It would be much, much more difficult to do that. And interestingly, like, it seems like the majority of people, like, even if they are able to get maybe like 5 cents or 10 cents or 20 cents on the dollar that they were holding on FTX, they're not going to be able to get all their money back, right? And many, I'm sure, will not be able to get anything back, right? And the process itself is probably going to take many years, if not a decade or more, right? You remember the Mt. Gox hack back in, like, whenever that happened, like almost 10 years ago, right? People are still waiting for their payouts, right? That's generally how it works. But although Alameda, which is like a company that was related to FTX, Alameda, like, during its bankruptcy, it did not pay back like the people that it owes money to, with the exception of all the DeFi loans that Alameda took out. Guess what happened? They had to be paid back. There was no choice, right? Like, it was just programmed into the code, right? The assets that were set aside specifically to be repaid at a certain date or with some kind of externality. I'm not exactly sure what the specifics were, but the various loans, right? You see publicly what the loan is. You see what the liability is. You see how long they have to repayment. You see if there's like any kind of like interest payments they have to do. And if something this occurs, right, we're going to trigger a repayment. You can't access those funds in the meantime, right? If you're Alameda, right? It's just kind of like taken from you in a sense. And as this was transpiring, CZ, who is the owner of the biggest cryptocurrency exchange, which is Binance, right? CZ has, he has an exchange, right? He obviously makes money off of this exchange, but primarily what he wants to do in the future, right? He's slowly, he understands that decentralized exchanges, where meaning like you just hook up your wallet and you just kind of like, you walk away, right? You don't have to give an email address. You don't have to like provide documentation as to who you are, right? You just have to hook up your wallet and then disconnect it when you're done. He's been saying for a long time, this is kind of the future, right? We can't have centralized exchanges that run everything. So a lot of his business has been slowly transitioning to providing infrastructure for decentralized finance, right? Something like Binance USD, right? Which is a stable coin that is actually backed by, true collateral. It's not like backed by some fucking like, bullshit internet money, right? I mean, part of it is, I'm sure, probably, right? But it's through Paxos, which is like an actual financial company that is audited, right? And it's redeemable, 1-to-1 for the dollar, right? And being able to liquidate that, right, to basically make it lose its peg would be a lot more difficult, right, compared to a stable coin that is like an algorithmic stable coin. And he wants people to use BUSD, right, versus something like the DAI stable coin or like whatever, right? He wants people to use that. So he saw what Bankman was up to a long time ago. He said something like, if you have competitors and you're worried about them, invest in them, right? Because that gives you leverage. So guess what he did? He bought a bunch of this FTT token. He saw what the balances on FTX were probably like better before any journalist did. He said, you know what? If they're trying to fuck around with my business plans, I'm gonna just dump everything. That's what he did. He dumped everything to the point where this exchange, which probably would have kept going for a long time if this didn't occur, right? It would have kept going. He dumped it, and now this is where we are, right? Everything goes insolvent. You can't pay off the liabilities. Collateral no longer exists, right? A lot of and a lot of the liquidations occurred specifically because of the DeFi loans, specifically because the fact that programmatically, right, you weren't able to escape your liabilities in that way. We'll just pass this. So anyway, now there's this kind of hero worship going on of CZ himself. And this is obviously a very dangerous thing, right? Because first of all, we have absolutely, biggest exchange in the world, blah blah blah. We have no idea, what the actual status is, right, of a centralized exchange. That, I mean, it's been rumored for a long time that CZ himself is, a lot of this is probably false, right? But people say things like, oh, there might be like a warrant out for his arrest, right? I don't think he travels to the U.S. much. I think at the very least, there are American officials that want to question him. So I don't know. Like, is there anything more to say about this FTX drama, right? Effective altruism, bullshit. Everything is like motivated reasoning. Everything is just kind of like a means of. Everything is just like a means of like. I don't know, like everybody's a pig, right? Everybody like just wants to fucking secure a bag, right, and live their like piggy little lives in whatever ways that they define a pig's life, right? It just so happens that with money, right, we just have like a ton of externalities there, like in the course of money, right? If you want to live your piggy life specifically under the auspices of cash, that changes you as a human being, doesn't it, right? One last thing is like it is. I will say that it is fascinating to watch. Like, this is probably what must have happened in the 1800s, right, when robber barons were blowing each other up physically, right? Since we're supposed to be more cultivated now, right? We don't do that anymore. We don't physically blow them up for the most part. What we could do now is we could buy up their fucking tokens and we could dump them and we could watch the fireworks. And there's nothing. I don't think there's anything technically illegal about this. Maybe like you couldn't do this if you were like an American exchange and like publicly gloat about it. But you could do this in real time and people will see it and people will ask about it and people will pat you on the back and it's all going to be considered, essentially above board. So, that's fascinating. That's it's a new way. It's a new way of doing war, right? Just like sanctions are a new way of doing war, and oftentimes the consequences again are pretty similar, right? The sanctions against Iraq in the 90s that killed hundreds of thousands of people, right? You didn't need to have a war just yet to have tons and tons of ramifications for Iraq. You didn't need that to happen. Right, you just needed the sanctions, and now we see this, sublimation of war, right? We have a sublimation of war, right? That in and of itself is fascinating to watch, but unlike with a more generic war, it's easier for people on the sidelines to, without quite consciously thinking about it, take sides, root for people, because you're disconnected from the blood, right? There is no actual blood to see, right? And the downfall of a billionaire is not necessarily ending with his death. So that's another kind of like part of this human element, right, that we could watch unfold. All right, so I do actually have to leave soon. So I'm probably going to have like a second part to this video right now, right? Like when I maybe want to get back to New York City as I'm walking around there. I'm going to record the rest of the stuff that I wanted to say. But before I do that, since I do have to get back to my Airbnb now, maybe I could just talk a little more of these topics. So I guess before I get to the economy, right, I want to talk about the economy. I want to talk about midterms. This whole, BRICS plus thing. So I see a lot of people that are like on this, multipolarity kick, right? They're really into the idea of, we need a multipolar world, right? We can't have a unipolar world under the auspices of America. Me personally, I'm not quite sure like where I would even fall on this, right? I'm not somebody that is into this idea of competition, right, between powers or competition in business just for its own sake, right? Competition in and of itself is not necessarily a good thing, right? Because what I would ask is competition towards what? What are you competing for, right? It's not that you could compete about anything that you want, right? You could imagine the most elaborate and the most pointless kind of game in the world that builds no skills, no intelligence, no nothing that could be unleashed from the game into the real world in a positive manner, right? It's all going to get trapped right under the context of a game, and people could spend their whole lives on it. And there's that famous quote about chess, right? A cultured man is able to play chess, but the greatest chess player has simply wasted his life, right? There's a sort of there's room enough for gaming and that kind of thing, but making these kinds of things your life is not a positive, right? Because it doesn't necessarily lead to anything. Another thing that they're bragging about, and this is weirdly libertarian, weirdly right-wing among a sensible left-wingers, but they seem to be bragging about the fact that BRICS Plus, if this thing comes to pass, they want to back. And by the way, this would include more than half the world's population and roughly half, if not more, of its energy resources, right? So this is major. But they're bragging about the fact that they want to establish a kind of currency that will be backed by, quote, real assets, hard assets, assets with built-in scarcity, as opposed to some kind of debt, right? America, the whole kind of Western world, right, sort of fueled by debt. That's not necessarily a negative. But anyway, so they want to back everything with hard assets. And this is kind of a de facto gold standard. But I assume it's going to be a kind of almost a petrodollar environment, right? If you're talking about hard assets, and energy is one of your key resources. With Russia, a lot of it is also gold, right? They have a lot of gold reserves that they've been offering at a discount, right? In exchange for buying it with rubles, that kind of thing. That doesn't seem like it's very wise, right? It seems as if what you're doing is you are, again, remember what I said about my previous Russia-Ukraine video? What is Russia? Russia according to Russians, what is Russia? And I'm that Russian telling you that, right? In that video, I talk about the fact that, Russia claims that it's establishing a new way of doing things. And my question is what exactly is new, right? In this case, it's the same question, right? The problem with the current regime, the debt regime, is you have tons of places where, although they can print their own money, right? And oftentimes, if you're in the European Union, this is the problem with Greece, you can't print your own money, right? So the way that you deal with that is going to be far more catastrophic than something like, I don't know, like France, right? Which could sort of like pull strings. Germany could pull strings to get whatever funding it needs. Greece is not able to do that because it's a much weaker player, right? So if we have a new kind of system of hard assets, and there's no actual like expansionary monetary environment, right? We're back to the same problem, and it's the same kind of like, you know, cool kids club, right? The cool kids are different. It's a new kind of club, but all that we've done is we just changed high schools, right? Or we just changed middle schools. Essentially, nothing else has changed. So I'm not as excited by these global moves because there's no evidence that this isn't going to be, you know, yet another recreation of the same set of problems, right? They're just like playing into like more kind of like strengths and weaknesses of the individual states. America, again, we could fund whatever liabilities that we want simply by printing money because we have infinite credit because we're too powerful. We have infinite credit as long as we don't fuck things up so badly, right, that we're not trusted anymore. But generally speaking, like we have that credit, right? We're going to get that. For Russia, right, it has to be much more careful traditionally with its finances because it's not able to get infinite credit. So it's always had a very sort of like, you know, a very balanced budget. Same with these other nation states. So, and that to me, those set of assumptions are too close, right, to a lot of the sort of political thinking, even in a place like America. And I don't view that as necessarily a positive development, right? The inklings of it, right? The bottom line doesn't seem that better. Anyway, like I gotta wrap all this up. I'm gonna add to this video, right? This is gonna be an extended video. So I guess in a few seconds, you'll see me in a new environment. Bye. All right, I'm back in New York City now. We're walking through Astoria, New York. Hopefully I don't look or sound too weird now because I just came from the dental office, so I'm still a little bit numb. So I want this video to focus on the midterms, right? What the implications of that are, any lessons we could draw. But before I do that, there's just some more commentary I want to give on the whole FTX collapse, on Sam Bankman-Fried. Just like, you know, more stuff comes to light, right? And also some stuff that I forgot to discuss. Specifically, like, we know, for instance, that Sam, right, he was a major donor to the Democrats. One thing that I failed to mention in the last part of the video was simply how there seems to be a decent amount of corruption going on related to the SEC, FTX, and these donations, right? I misspoke last time when I said that Sam's parents were tax attorneys, or actually Stanford law professors, and they have had, you know, it seems like some kinds of relationships with Gary Gensler, who's the current head of the SEC. And it seems as if, right, there was this kind of implicit carve out for FTX to have established some level at least of like monopoly power in the market, right? Whether that's for you know, less sinister reasons, such as the fact that you know, there was at least some reason to believe that FTX was you know, like as a more kind of, let's call it regulated exchange, although that seems to be a bit of a misnomer, right? It seems like most of these cryptocurrency exchanges are being treated like very sort of kind of like, you know, almost like credit unions, as it were, right? As opposed to you know, actual like, you know, major holders of money that engage in all kinds of, you know, like financially complex transactions. So that would be like the less sinister reading, right? We have FTX being the so-called chosen one, right, for American enterprises, chosen by the regulators, chosen by, you know, those with some level of political power, The more nefarious reading, of course, is the fact that I keep seeing this term being thrown around that we have Sam being the #2 donor to Democrats for the 2022 midterms. As far as I'm aware, he's only #5, but still, that's kind of like in a relative sense, right? He's still very major, and it would be fascinating to see, you know, like what emerges from this. Like, will Sam be offered up as a kind of sacrifice, right? Because there's certain things, right, you're not supposed to be allowed to do, right? You are not supposed to be playing loose with customer funds. Of course, banks do the same thing. Obviously, when you put money into a bank, the bank invests it in various ways. Oh, the numbness actually is pretty much going away now. This dentist is really amazing. I started going to him a very long time ago, and I remember the first time I was there, he did the anesthetic injection, and literally within like a minute and a half of leaving the office, the numbness was completely gone. Like, we timed it perfectly, right? And I've never had a dentist this good, so it's already now going away. So I'm feeling a little better about doing this video under the circumstances. Anyway, so there's certain things, right, that you're not supposed to do, right? Banks, obviously, they do play with customer deposits, but on the other hand, there's also guarantee up until, right, the $250,000 insurance threshold, right, which is basically, more or less saying you can mess around with deposits as much as you want up until we reach that critical stage, right? Like, we can only insure up to $250,000 worth of financial tomfoolery, right? So we already are just constantly working under the assumption there's going to be, both legal and illegal tomfoolery when it comes to banking. The thing about crypto is it is supposed to be the opposite, right? Ideally, at least like some of the foundational texts or whatever with crypto, you're not supposed to be operating as a kind of shadow bank, right? Which is what FTX was. And because it's sort of engaging in some of the same kind of shenanigans that you see with shadow banks, the difference, of course, being that there was first of all no insurance guarantees here, right? It's going to be many years for people to get back any kind of money that they could. Many people might not receive anything at all, but it would be interesting to see, as I was saying earlier, to what extent is this going to be tolerated, right? As a major Democratic Party donor. And also the other part of it, of course, is that his partners were giving, maybe not as much money to Republicans as he was giving to Democrats, but there was still a substantial sum, right? To what extent is being in bed with the regulators, being a so-called chosen one, the fact that, none of this would have even come to light if it weren't for CZ of Binance, essentially dumping the FTX token. It stands to reason, right? Like, will they go easy on Sam, right? And I think there's, at the very least, like there's some evidence that whatever choices they ultimately end up making about like prosecution or whatever, right? There's multiple investigations now opened into FTX, and perhaps there are already some things that were ongoing, before, right? The Justice Department has opened investigation into FTX, that sort of thing. But I still see some signs that those that lean liberal, right? I'm not going to say lean left, right? But lean liberal. It seems like they're trying to, at the very least, protect him a little bit, right? And the evidence that I would put forward is the New York Times recently ran a piece in the last 24 hours or so, just like, essentially whitewashing what was going on with this exchange, right? It did not mention, for instance, the fact that Sam had installed a backdoor on his exchange where he could easily move around funds in places where they're not supposed to be, customer deposits into places that they're not supposed to be, without auditors noticing, right? Because the whole kind of, fake regulation that I alluded to earlier has to do with that specifically, right? We have a bunch of auditing firms that they were working with, but what good is your audit if you have a software built, bespoke software that is just simply there for one purpose, right, which is to hide the moving of funds. So this piece does not mention any of that, right? It doesn't really go into what was going on with customer deposits. It sort of paints Sam as a victim purely of circumstances, right? Someone that simply, took on too much risk too quickly, was biting off more than he could chew as far as trying to save, let's call them, right? Like some of the smaller players are going under in the last few months. And since that's the case, right, and the New York Times is running this, and it seems like the reporter was he was not only proud of this, but months before he ran a much more negative piece on this other crypto CEO that what was his name, Jesse Powell or something from this other exchange called Kraken. And as far as I can tell, maybe Jesse Powell is kind of like a more generically a piece of shit in terms of his interpersonal behaviors, and some of his personal beliefs might be kind of shitty, but it doesn't seem like he was ever on the verge of, he's been around for a long time, right? Doesn't seem like he was ever on the verge of preventing customers from withdrawing funds, making people lose all their money, blah, 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 right? So the negative coverage was specifically geared towards these, personal, shenanigans that maybe Jesse Powell would get involved in, as opposed to, things like business ethics, right? Or the lack thereof. And, the only reason why there would be this discrepancy is because Sam, right, what is his aesthetic posture, right? His aesthetic posture is, I'm a vegan. His aesthetic posture is, I'm gonna dress and look like a total fucking slob. His aesthetic posture is, I'm going to give money to Democrats. His aesthetic posture is, when I speak, I'm going to use, many of the same kind of liberal coded language, right? And obviously, none of those things are sufficient, right, for personal goodness, right? So what exactly is behind this whitewashing of Sam? Another part of it, of course, might be the fact that, for almost 2 years now, and especially in the past 1 year, and especially the last 6 months, when it seemed like FTX was one of the exchanges that was ultimately going to do substantially better than the wider crypto market, a lot of journalists, right, putting all these facts together, plus the fact that Sam was promising $1 billion donation to Democrats if Trump runs in 2024. Many journalists who are, essentially sucking his dick, they don't want to be in the position of, feeling foolish, looking stupid. So there might be, at the very beginning at least, these attempts to whitewash what was going on. The biggest scandal, as far as I can tell, right, in American politics or in American regulations, all this stuff, is specifically has to do with the fact that bribery itself is legal, right? How can an individual player be allowed to give $50 million to pass the legislation that he wants? These journalists are whitewashing this now, right? They spent the last 2 years being very negative, specifically on Bitcoin, which is, it's an amoral kind of, it's just like one of these amoral pieces of technology, right? Just like a corporation is essentially amoral. It's very, very unwise to view anything, whether it's technology or an entity that is, just kind of like a profit maximizer. Anything like that should never be seen as for some sort of greater good, right? It is at best an amoral actor that has a specific thing that it needs to do, right? With a case of profit seeking, it is profit maximization, right? When you look at, you know, a CEO's responsibilities, right? The first and foremost, with the way the things are set up, all the incentives are you have to do well by your investors, right? You have obligations towards your investors. Having obligations towards your investors means that if you can either skirt the law or be within the confines of the law, but still, you know, engage in unethical behavior, right? You still, you know, have that duty, right, to your investors, right, to do as much as you can. And, you know, every company essentially, right, if you look at the S&P 500, pretty much every company is always at the sort of like edge of what is legal, what is not legal, which means that the laws themselves, right, instead of sort of aiming high, they always aim pretty low, right? They allow specifically that amount of wiggle room. So technology itself is also very amoral in that regard. But here's the interesting part: when you look at any sort of nascent industry that promises tons of financial returns, whether it's crypto or anything, whatever, the fascinating part is it's always going to look the same, right? If this is that type of nascent industry. So whether it's gold, right, in the past, right, if you're to chart the fluctuations of the price in gold going back thousands and thousands of years, right, if that was possible, right, we obviously don't have the data points for that. We would have so many different data points, right? Gold at different places at different times. There was no central market, obviously, right? There was no collectively agreed upon price the world over. I mean, even now, right, we have, you know, these kinds of natural and unnatural sort of like artificial movements, right? Whether it's like Russia offering to sell its gold reserves at a discount if they're, you know, if they're bought through rubles or what have you, right? There's always these kinds of artificial and not so artificial. I don't know if you want to call them inefficiencies. I guess in some ways they are, right? To the extent that there's this like libertarian myth that markets are efficient. But anyway, if you were to chart gold going back that far, you would essentially have times when it would be worth essentially zero, right? Because you can imagine that in a time of famine where you don't have like a central, you know, international market or whatever, what is a gold bar worth when you could have cattle, right, in a time of famine, or fruit, right, in the time of famine, right? Gold is worthless, right, compared to something like a cow, right? And if you imagine like charting the price of gold against cows, right, obviously cows would be on a parabolic move up, right, during a famine period. And it took a while, right, a very long time, for gold to find its groove on this logarithmic growth curve, right? And a lot of stuff, right, the world over, doesn't have to be technology. It finds its groove on something called the logarithmic growth curve, right? That's like the rate of adoption. That's the rate at which kind of like people collectively, whether, you know, whether correctly or not, they nonetheless collectively decide that this is, you know, the value of this like thing, whatever it is, like gold, whatever, doesn't matter. And with something nascent, right, a new nascent technology like cryptocurrencies or whatever, they're going to be stuck, right, trying to find their growth on, or rather their groove on this logarithmic growth curve. And in every instance of this, whether it's gold, whether it's whatever, anything that promises or suggests or implies or just has the tiniest peep of outsized returns beating generic market returns, you're going to get the wrong kinds of people involved, right? And this is one of the parts about cryptocurrency specifically that is just such a huge contradiction that I don't think cryptocurrency enthusiasts will ever be able to actually resolve, right? How do you deal with the fact that your space is going to always attract scammers? It's always going to attract fraudsters. It's going to attract people that are profit maximalists. It could be people like Sam, who have this whole kind of like fancy fucking philosophy for why this is a good thing, right? I should be able to skirt regulations. I should be able to act unethically and illegally, right? Because I have this greater good in mind, whether it's like I got to get Democrats into office at any price, or whether it's, you know, this thing is going to be for the global good, or simple as, you know, maybe crypto is not for the global good, but if I can make a ton of money off of it and then retire and give everything away, that's obviously positive, right? So, or when I say obviously, right, I'm going specifically through the mindset of Sam, right? I'm not actually saying that myself, but this is, you know, but this is the thought process, right? So, since this is what's going on, how do you reconcile, right, those contradictions? Right, cryptocurrency, if you want to trace its origins to, you know, Satoshi Nakamoto's white paper, you know, it's just, you know, we're here to get rid of shadow banks. We're here to get rid of intermediaries, and we are here to replace, you know, one system with something that is innately more ethical. At the same time, for that to occur, right? If you're saying that Bitcoin is superior to soft money like fiat, which I don't believe, right? I believe in an expansionary monetary base, because how else are you going to make proper investments, right? If you look at the countries that are limited, like when I was talking about BRICS or BRICS Plus earlier, right? If they're in fact going to embark on this thing where their monetary base is just totally non-expansionary, it's backed by hard assets, whether that's going to be oil or gold or, you know, whatever, like natural resources, right? They're going to be limited as to what they're able to do based on that alone. Now, some countries have to be limited, right? Like Russia being on the brink of collapse in the 90s. Right, that's like, you know, you have two collapses, right? You have the USSR collapse, then you have Russia itself being in the brink of collapse, essentially being a non-functional nation state, right? No real state apparatus there. It was limited, you know, in terms of what it's able to do, right? It's not able to so easily embark on the kinds of, you know, like securing the kinds of credit that Europe or that America is able to perpetually secure for itself. Right? So Russia, to use one example, has always had very, let's call it balanced, you know, budgets, right? Very balanced books. It conducted itself, and I don't like to use this word, but I'm going to simply use the language of finance here, right? It embarked upon very professional, right, managerial styles, right, for itself, right? And again, I don't want to use the word professional in my, you know, in my own head, right? I'm just sort of giving you the financial lingo. So but if crypto, you know, is sort of assuming that this is bad, right? We're not supposed to have any kind of expansionary monetary supply. If this is what people believe, right? And this is supposed to be some kind of future, the contradiction emerges specifically when, for this to ever have any kind of future, it needs to actually have, right, if it's like called a store of value or like whatever, or originally intended as a peer-to-peer cash system, ultimately, for that to have any kind of traction, for it to be, in fact, a store of value, there needs to be stability, right? But the reason why I alluded to a logarithmic growth curve is what happens at the end, right? What happens at the end of any kind of logarithmic curve? Eventually, you get logarithmic decay. Logarithmic decay means you have extremely, extremely slow process of like any, you know, future value accrual. The idea is once the market decides that this is the fair value, this has utility, right? The market makes that decision based on a utility that is visible, right? If it's a visible utility, if it's visibly a store of value, you cannot simply jump up and down in price, crazily, right? That shouldn't be occurring. Otherwise, it's not a store of value, right? So at the tail end of a logarithmic growth curve, you get logarithmic decay. And logarithmic decay is when all this stuff is supposed to happen. That is supposed to be that decision point. That is supposed to be the point of consensus. But for you to get there, you obviously need to multiply value along the way, right? It needs to grow exponentially, right? From like $5 in 2012 to $69,000 in 2021. Right now it's back to about $16,000. That is the process of capitalization, right? Whether it's gold or anything, right? Amazon, right? Back in the day, right? That process of capitalization along the growth curve takes a long time. But as it's happening, who are you attracting, right? You are attracting sociopaths that love the price moves. You're attracting bad actors who, it's a tale as old as time, isn't it? Right? Sam gets in here and he's demanding the kinds of regulations that would specifically benefit his style of trading, his style of exchanges, his set of preferences, his own financial imperatives, right? So he gets in there, right? And he starts demanding these sorts of regulations. Other people like CZ, right? He wants the opposite, right? He's CZ, right? Again, like I said earlier, he's not a hero here, right? He just happened to see a weakness in a competitor and he had the means to blow it up. Right, he probably, runs a better business. I mean, it wouldn't surprise me if ultimately Binance folds and everybody else folds, right? Simply because this seems to be more so the norm rather than not. But it does seem like overall he runs a better business than Sam ever did. But he found a weakness and he exploited it, right? These are amoral actors. So what exactly are the values here, right? You're trying to establish a better kind of system, and yet innately, right, you need it to be well capitalized, and yet on the way to this level of capitalization that is sufficient for it to be a store of value operating under the laws of logarithmic decay, you had so many sociopaths along the way. Now, granted, many of them, right, seem to just all die off, right? There's this meme going around, Sam, join us, right? And it's a bunch of people in heaven that used to be involved in cryptocurrency heavily, right? They used to be the main characters, right? People that, most people probably have not even heard of, right? Because they're all kind of long and gone. So many corpses along the way, not only of the major players, but obviously, the people that are speculating on crypto, right? Any process of capitalization is going to be gambling, right? How did the stock market behave during the Great Depression, right? During the Roaring 20s? It was no different, right? You had the general stock market declining something like 85%, which in China, similar things are happening because they're still in the process of capitalization before things stabilize more. But an 85% decline, right? That's a Bitcoin decline, seems every single cycle, right? When it comes to those smaller coins, we're talking about, minus 99.9% loss of value, if not 100%. That's exactly what happened in 1929, right? That's exactly what happened during the Great Depression. That's exactly what happened during the dot-com boom, right? During that boom and bust cycle. But the wider market, obviously, because it's already in the process of being well capitalized, right? It's not a developing economy, right? America is not a developing economy. You don't see the kind of violence that you would normally see in a place like China or maybe a place like India. Nonetheless, along the way, there's so many corpses of, regular small-time speculators, big-time speculators. They have only one goal here, right? Whether it's people running their various psyops campaigns on Twitter, or whether it's the CEOs themselves. Everybody just essentially wants to separate you from your money, right? That's true of anything and anywhere, right? And it's more true the closer that you get to pure money, right? Pure speculation, which is like just finance in general. Even like the wider stock market, right? It's more or less pure finance, right? It's hard to say otherwise, simply because, again, like I said earlier, in the earlier part of the video, in Kingston, even investing in something like the S&P, right? You are giving money to instruments of war, aren't you? Right? You'll have all these think pieces written about, $3 trillion. That used to be the market cap of crypto. And, you shaved off $2 trillion. Isn't that amazing? Think of how many people have to die along the way for that to occur. Well, in 2011, right, America gets involved in Libya. We go from a legal intervention, right, a legal intervention in the Civil War to reduce the body count, to illegally running a campaign of regime change. Because of these actions, everybody living in Libya, right, they essentially bought the equivalent of buying, a stock top or a Bitcoin top, or like any kind of, top of any kind of financial derivative, right? Because they went from having like a $35,000 or like $40,000 a year median income or whatever it was, down to like a $4,000 median income, just like years later, right? So we had $2 trillion wiped off of the GDP there, like over the course of like 10 years or so. It probably adds up to something like 2 trillion or whatever it might be, right? But you don't have pieces written about that, right? Nobody seems to be moralizing about any of this, right? And it's not considered a moral dilemma, right? So the point that I'm making here is, in any kind of situation, right, of financialization, capitalization, right, that process is creating corpses, right? Whether or not ultimately, like, what we're doing in the world right now, the kinds of investments and the kinds of technology we're creating, the kinds of, societies that we're creating, whether or not that's going to be for the greater good, a century from now or 2 centuries from now, I do believe in the progressive trajectory, right? I do believe in this like arrow of progress. That said, no matter what that looks like along the way, this is exactly what it is, isn't it? Right? You in America are sitting around and you have a retirement fund and it's all denominated in S&P, and the S&P has what? Right? It has total sociopaths like Elon Musk right now, the biggest company in the S&P. It has instruments of war. It has banks that have, because of their own malfeasance, led to like the Great Recession, which led to austerity, which led to blah, 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 blah. Right? Whole countries going under. Right? This is what capitalization looks like in any kind of industry. It's always going to look that way. So the more purely embedded you are in like pure finance, the worse the people are, right? There's no heroes in these kinds of spaces. And I want people to totally divorce themselves from this idea that this is a place with legitimate heroes, right? There's people that you can look up to. Oh, Sam was running a scam, and CZ exposed it, so clearly the Binance CEO must be the good guy. Don't think of this way, right? He might very well be the next guy that goes under, and and if that happens, right, it will be purely because like something will be exposed about the operations that shouldn't be occurring, right? Taking on too much leverage, fucking around with customer funds in ways out of proportion, even with like typical shadow banks or whatever, right? So don't do that. Anyway, that's enough on Sam and FTX and all this shit. Let's talk about now about the midterms. So, Democrats, I guess, like, first of all, I actually wasn't following the polls too closely. I just assumed that Democrats will, they will not like lose horribly or anything, but they're probably going to lose like at least a house, right? And I figured, well, things aren't things aren't horrible, right? They're not great, but they're also not horrible, right? And this is the important part. Things may not be great, but they're way better than the media makes them out to be, right? Because yes, there is inflation. Yes, there are rate hikes. Yes, Democrats haven't passed anything really, truly substantive since getting into power, despite promising absolutely everything. The fact is, like, most voters will vote according to how things feel, how things are, what their day-to-day lives are like. And their day-to-day lives are substantially better than they were in 2020, right? They're substantially better than they were even in, the first half of 2021. This is true even though that money spigot has been turned off, right? We turned off that monetary spigot. The deficit has definitely shrunk, right, since Trump was in office. The deficit has shrunk since Biden first took office, right? The deficit now is smaller than it was in 2021, right? That said, the deficit is still there to the extent that any amount of deficit exists in a modern nation state, right? I don't, this isn't necessarily true in a developing country or whatever, but in a modern nation state, any deficit will eventually find, whether it's in regressive fashion or, something that's like has a better multiplier effect, a deficit will always find its way into the pockets of everyday people, right? Because a deficit on the government balance books is money in your pocket, right? It's money in the private sphere. And people don't seem to understand that, right? If you have a ballooning deficit, and this ballooning is occurring because, I don't know, somebody passes Medicare for all, right? That is literally, all that means is money in the pockets of people that would otherwise be overpaying for health insurance, or, overpaying in some more abstract sense of like, okay, I don't have insurance, or I don't want to pay these premiums, so I'm not going to visit the doctor. I'm going to get more sick, right? You're going to have all those kinds of cases, right? So any level of deficit in a modern nation state, at least in the West, is going to mean money in the pockets of the private sphere, and that deficit exists, right? So politically, right, Biden could brag, and you see like Democrats on Twitter also bragging about this because they don't understand this concept. Biden could brag, hey, look, we've slashed the deficit for the first time in X number of years, right? And that primarily occurs, right, because of the coronavirus money, the coronavirus stimulus, like that was like being wound down in 2021 and now especially 2022. Nonetheless, it exists, right? Unemployment is very low, right? It was at historically low levels during the time of Trump, right? Specifically in the black unemployment rate, it was the lowest I think that it's ever been, right, under Trump versus, in any time in American history. And that has more or less continued, right? Employment, I think, ticked up a little bit in 2022, but that's not really going to be felt, especially relative to 2020, right? Or even like relative to something like 2017, 2016, 2015, right? Those things are positive developments. So the generic voter is going to vote according to this. So I did not expect there to be a red wave simply because like there's only so much that a culture war could get. I mean, like, what kind of campaign were Republicans running, right? They were running a fucking, like, they're talking about trans kids. They're talking about critical race theory. I mean, who gives a fuck? These are such minor issues for the vast majority of people, right? The majority of voters are not tuned into fucking Twitter. They're not tuned into these dumbass internet level discussions. They don't care about that shit, right? That's reality. And if that's reality, it would be very weird to expect like truly a red wave. The second thing I want to talk about is these rate hikes and maybe the economy more broadly. So, based on the logic of MMT, I know that those that subscribe to MMT don't believe that rate hikes slow the economy, and they don't believe that rate hikes could reduce inflation, right? And I don't. I know that that's like the MMT received wisdom. I'm not sure. I haven't seen like sufficient studies to know whether or not this is the case. But I thought this would be a very interesting test case for this, right? And so far, it seems like the MMT crowd is absolutely correct on this. We had an expected plus 200,000 jobs in November. The actual number was something like 260,000, okay? 60,000 over expectations. That's like, that's like almost like 30% higher, right? So, but besides that, like, notice the kinds of people that were pushing this narrative of the economy is not only horrible, but it's the worst that it's been in many, many decades, right? Think of Elon Musk, right? Think of his comments and where they were coming from. What was the motivation exactly? Elon Musk was saying back in March 2020, if the trend in China holds, no new coronavirus cases in America, or really kind of like the world over, he seemed to be saying, by April 2020. That is the level of stupidity, right? And the level of arrogance and the level of like billionaire hubris that was going on back then. And the reason why he was so adamant about this and wanted to use his 100 million followers or whatever on Twitter to kind of like parrot this line, he didn't want to see lockdowns. Why doesn't he want to see lockdowns? Because first of all, so much of his production is in China, right? He would hate the idea of China being locked down in perpetuity, right? He does not want to see America locked down. This is going to be bad for business. This is going to be bad for tech stocks. This is going to be bad for all of that. So he was parroting a false line based on his own financial incentives, right? Remember what I said about what happens, right? When money gets added to any kind of a situation, suddenly reality, which seems like reality to you, that changes a little, doesn't it? He starts doing the same thing in 2022, right? As the markets were starting to process this idea of rate hikes, basically, let me put it this way. So with rate hikes specifically, what they can do, right, is they can take froth out, right? To the extent that you have companies that are trading well above their earnings, to the extent that there's like, a lot of like speculative sort of like mania going on, whether it's like crypto, stocks, like anything, real estate, right? Obviously with real estate, right? If you have like extremely low rates, right? People are going to want to buy houses, right? At the very least, like even if you don't need a house, you might be able to sit on it, right? And when rates go back to more normal levels, more typical levels, right? You now have a mortgage that is cheap, right, compared to everybody else. So, a lot of speculation, a lot of mania. So you could take the air out and the froth out in that kind of situation. But all that means is as follows. It means that stocks and assets in general, these assets are going to now need to find a new equilibrium point, okay? And a new point of equilibrium does not mean a chronic bear market where everything continues to go down forever, right? Or years or whatever it might be. You could take the air out of a bubble fairly quickly, and before you know it, you have found an equilibrium point, right? At the same time, what markets are not processing, because this is not received wisdom, although this seems to in fact be the case, when you do have rate hikes provide again, in a very kind of regressive fashion, but they do provide a long-term fiscal support, right? The fiscal support comes from the fact that the United States has to expand, like a lot of the more recent deficit expansion has to do with the fact that rate hikes themselves, right? They add to the deficit because the government has to pay interest on its, it has to pay interest, right, on a higher level interest, basically, right? That comes out of spending, right? That increases the deficit. Now, you have to think about who does this money go to, right? The money tends to go to people that already do have money, right? Ordinarily, if you want to have true fiscal support for the economy, you don't want to do it in such a regressive fashion. You want everyday people to be able to spend as much as they can, right? Because this is really what supports an economy. But a rate hike still, again, I know this sounds very counterintuitive, but a rate hike still will support the economy simply based on expansion of the deficit, right? Simply based on the fact that now, as stocks are going down, as other assets are going down, well, you have an increased income, right? Maybe it's not to the people that should be, they're deserving of this increase of income, but they're getting that increased income. An increase of income is not the same thing as obviously like long-term capital gains on, whatever, asset, whatever, going up over time. But providing that income means, guess what? You could go out and spend it on goods. You could go out and spend it on investment assets. So the market, I think, has very much found that kind of equilibrium. For somebody like Elon Musk, see what he's saying in earlier 2022, right? He's saying that the market, the economy looks very weak, right? What is this based on, right? It's not based on anything. All that was happening was that his stock price, his Tesla stock, is going down. All that was happening was now he has this like fucking bad deal where he has to buy Twitter, which is not a profitable company. Now he has to buy it at a fucking premium, right? And he has to sell Tesla stock in order to do it. Now he has like a new headache to deal with, just all around stupidity, right? He has to deal with that. He doesn't like it. His main goal is, let's reverse these cuts, right? Because even to him, like a rich man, like I don't think for the most part, these interest payments are going to be going in his pocket, right? He makes his money specifically through the holding of these kind of like more long-term assets, right? His companies. So that is Elon Musk's motivation here, right? It was his motivation in March 2020, and it was still his motivation now, right? The idea that we need easy money again, we need easy liquidity. If we have easy liquidity, then we could have a greater sort of speculative fervor going on. Personally, I think like long term, I think it will be much, much better if America settles on a strategy where you have far fewer of these speculative peaks and far more long-term stability. This means that you're going to have to sit on assets a much longer time, right? There's going to have to be a lot less buying and selling, and it has to be, rational, right? Meaning prices have to be rational. They have to be in line with whatever the economic reality is. But we're not quite set up in this way, right? The economy is still digesting this idea. Like it's still so obsessed with rate hikes, and it's missing the actual underlying reality. And this is where like anybody that's like saying stuff like that still believes in market efficiencies, right? An efficient market. That myth should have gone out the window when it took the market 6 months to start calculating that rate hikes were in fact happening, despite the fact that they were, telegraphed so far in advance, and B, that these rate hikes are necessarily going to be bad for the economy, right? Because so far that doesn't seem to be the case, right? They're only bad in this kind of broader sense of you're creating money in places that these are not the places where money should be going, right? That's really it, right? That's basically what I'm trying to say about that. So given that this was the actual reality, it's very hard to imagine a red wave of resentment against Democrats, right? That's not to say there isn't a very well-founded resentment against Democrats. I mean, there ought to be. Again, think of how little anything happened, right? Think about the fact that so little anything that was worthwhile was passed, right, in the past 2 years, despite the fact that we could point to so many Democratic Party promises in 2020, right? And virtually none of that got done. So the resentments come from there. But in the meantime, because even Democratic Party inaction wasn't enough to destroy the economy. Just like under Trump, right? I mean, with the same people that are now crediting Democrats for doing so well in the midterms, would they credit, Trump for the early 2020, like pre-coronavirus economy? Because at that point it was, if coronavirus never hit, it's pretty obvious that Trump would have won re-election. He would have had to win re-election because at that point you had a very strong economy overall, right? The rate hikes are creating yet another huge chunk of inefficiency in the market, where you're seeing this disconnect between what the economy is actually feeling versus what asset prices are doing, right? Because now you're in this kind of like very twisted relationship, right, where markets are seeking a slowdown of rate hikes, which means that anytime you have like spectacular job numbers or anything else, right, there's often a negative response from the markets because they're like, oh shit, like we're going to have to hike rates higher and higher and higher, right? And again, that's not to say that I want rate hikes, right? I think a 0% interest rate, period, flat, zero, forevermore, is the ideal scenario for everybody, right? Because think about this logic of like inflation being controlled by rate hikes. I mean, like, first of all, we know what companies do, right? And we know very, very well that if the price of cash, right, which is essentially what a rate hike is from the perspective of a company, the price of cash goes up, they're not going to be eating that fucking cost. They're going to pass it on to you, the consumer, right? You're going to have to eat that cost, right? It's going to be reflected in the price of credit. It's going to be reflected in the price of goods. It's going to be reflected in the price of services. It's going to be eaten primarily by you, right? So on some level, right, rate hikes themselves are inflationary. Who knows how long we're going to keep, rates either where they are now. Even if we stop right now, right, we're talking about like possibly a doubling for many people, a doubling of your monthly mortgage payments, right? Overall, like, let's say property taxes, the mortgage itself, right? All of that. In some cases, it's going to be like a doubling over like if you bought a house literally a year ago, right? So people are not very keen. Like, since now information gets out more and more, right? We have less information asymmetry than we used to have, like compared to maybe decades ago. People are able to sort of read charts a bit better. They're able to understand where we are historically in something like an interest rate environment. You're not like very keen, right? You don't have this itch to get out of your house, right? You don't have this itch to like sell your home, because like, what are you going to do? Like buy a new home and possibly get a new mortgage. You're going to be paying twice more. So you have this like cooling off of prices, but I don't really see a very kind of logical territory, right, for there to be a wider crash, unless of course there's like some, like systemic risks going on, right, in the system, like we had in 2007, 2008. Unless that is happening, like there's no natural path for a true, real estate crash. So, I mean, this is like more or less where we are here. I don't know. I feel like I've been talking a lot. I don't really have too much else to say. I'm really hungry. I can't eat for like another hour or so. So I'm gonna have to, I guess wait it out. Thank you for watching, and we'll see you soon.